Hello, folks. Welcome to Pro Trader Strategies Market Commentary. We are an educational company, so we're here to talk about the markets, look at some technical setups, and then educate you guys on how to spot the optimal option strategy for any given assumption. We don't just look at a bullish assumption and go for the long call here at Pro Trader Strategies. What we need to do, folks, is look at the pricing and see whether or not that pricing is expensive or cheap, and that's really going to be what determines your option strategy. And I teach you how to spot that stuff in these daily market commentaries. So please check those out. And the webinars I do on Thursdays, we do those right after the close, where I'm going to look at every individual option strategy, drill down on that strategy, and show you how to spot when you should be implementing that strategy, maybe over some other strategy that you're more accustomed to or more comfortable with. We'll stretch that out just a little bit here. Also, if you have any questions, comments, or anything else throughout this video, please flip over there to the side and comment, because I will make sure that I reach out to you either now or circle back around after the video if you happen to watch this on tape delay, to make sure you're all clear of concept. And finally, smash that like button for me right now. It really does help us out. Finally, my name is Eric Wilkinson. Yeah, you might recognize me as Wolfman from mainstream media, but here we go with the economic data. Let's get on with it. Across the pond, this is the day we were looking for across the pond, because we get flash estimates, which is similar to our ISM, which is Institute for Supply Management here in the United States. So Purchasing Managers Index for the manufacturing sector. These are the gentlemen and ladies that are buying raw materials for what they see as forward-looking demand. So this is why I like to look at this economic data point, because it's actually forward-looking. These folks are looking out in time, looking for future demand and trying to calculate that right now here. So anything above 50 expansion in the economy, anything below 50 is contraction. Well, we've got them all above 50, continuing to keep them above 50 for the last several months. So Spanish manufacturing, French and German, which are the most important aspects of the manufacturing sector of the European sector, all above 50 and right in line with expectations. So I'm not going to spend a whole lot of time talking about that. Then we talk about the Great Britain's in line with expectations, also above 50 as well. Greater European unemployment rate, slightly lower than expected at 7.9% there. Here in the United States, this is what we've been looking for. We got our unemployment claims coming in lower than expected at 364,000. You know, that might be because, remember, we just saw the ADP numbers here coming out for the United States, where the employment change showed a lot more hires, over almost 150,000 extra hires than what was expected. So that's probably why we're seeing a little bit of a dip here in this economic data point that we're talking about here. All right, so finally, where am I? I got lost a little bit here. Bear with me for just a second. I want to talk about the U.S. unemployment claims. ISM, Institute for Supply Management. This is the number we look for, folks, because this is forward-looking. This is Institute for Supply Management, manufacturing, PMI, Purchasing Managers Index. It did come in slightly below expectations at 60.6, but remember, anything above 50 is expansion, and up in the 60s is actually a pretty good reading, to be quite honest. I mean, last time we really saw these readings, other than a couple of months ago, is back to 2018-ish area, in and about that area. The Institute for Supply Management, prices paid, though, we're talking about inflationary numbers, right? Well, is this going to be transitory? 92.1, that's the highest reading I could find, going all the way back to before the financial crisis in 2008, folks. So this number, prices paid, jacking up. They're saying it's transitory, but we're going to have to really see. We're seeing prices for crude oil making highs again today. Natural gas storage, a drawdown of a build of 76 billion cubic feet. It was only supposed to be a build, or expected to be a build, of 68 billion cubic feet. All right, let's get on with the markets. XOP, I don't know why I have this up, other than I blew out of it today. With oil moving to the upside. Hold on, let me share the screen. I always forget to do that, because it's always done it for me for the past 5 years. It's a new process. All right, so here we go. XOP, I had this in my IRA and in my trading account. It blew off to the upside with crude oil making new highs again today. Not all-time highs, but the highs we've seen since, basically several years at this point. Anyway, 2018, I think it was. XOP, if you guys remember, I went in there and bought some puts because I was expecting this energy sector to start rolling over. Well, we got a little bit of a rollover and then a bounce today. So I decided to pull the ripcord on this thing and had on the September. I was long the 90 puts in there and I paid $5.50 for it. I dumped out them for $3.75 today. So out of XOP in my IRA and in my trading account. And that's because what we're seeing here in the equities, in crude oil, is this high 76. That's when I decided to pull out of this. We started breaking above this resistance area. I thought we were going to start rolling over. We start looking at the other charts, all the energy sectors. They were looking pretty weak. Now all of a sudden we're seeing this rotation out of tech a little bit today. Remember, we were seeing that pop in tech, and I was talking about travel and leisure really was getting beat up. This could be an opportunity to get involved in travel and leisure after they've sold off a little bit. I'll talk about some things that I've done with that, trying to get in on that travel and leisure as they've been beat up. I think that people are fired up to get out of town this summer, and I think we're going to really see some travel start to pick up here. So crude oil, as you can see, was ripping to the upside. That caused me to get out of my XLE and my XOP. We talked about getting out of the XOP, but the XLE is also energy related ETF, and we got that pop today. Now, obviously, everything is starting to look in this energy sector a little bit weak as the day goes on, but you know, timing is everything. And at this point in time, I had the outlook that this was going to continue to rally. So I just wanted to get out of it. It doesn't mean that I won't retool and die and get back in, but at the end of the day, it was time to get out. And an XLE, I had on the bearish risk reversal in XLE. That was because I was worried about the underlying kind of trending sideways here, and I didn't want options to really start decaying. So if we create this synthetic short or a bearish risk reversal, which is really how this one was set up. The difference is the strikes are different with the bearish risk reversal, and I drilled down on those details in those webinars. Please check those out. But anyway, with this one, I had put this on where I had bought the 49 puts in there and sold the 57 calls, which is above this all-time high here. So I wasn't too worried about it. And because I collected I ended up paying a debit for this trade for $1.10. That's not right. I got out for $1.10. I was like, that's not right. I got in for 29 cents. I got a credit of 29 cents. I had to pay $1.10 to get out. So all in all, about $1.40 loss on this move to the upside. We did get a little bit of volatility expansion, but at the end of the day, the directional move here did not help out. So I'm out of XLE on it. Again, not to say that I'm not bearish in this, but it just broke above what I was looking for my technical setup. So I decided to pull the ripcord on these, especially with the limit of supply. I'm seeing China flying over Taiwan, all of these global things that are going on, and those tensions have a tendency to drive crude oil a little bit higher. So if those tensions start jacking up, I'm going to kind of pull out on that for right now. But like I said, doesn't mean that I'm not going to retool and die if we get another setup. And with today's setup, it's going to be pretty hard to stay away, I think, at this point. So with XLE, following the rest of the broader indices or ETFs in the energy sector, just not looking too good. And bonds, not a whole lot to see here. I've talked about this right here around that 160 handle is going to be the sweet spot for interest rates and the bonds, because this interest rate's right around 1.6 or something like that right now. The Dow Jones Industrial Average we got here moving higher on the day. Something I wanted to talk about this. Yesterday, we were seeing weakness for the first part of the day. Late into the day, you can see we just rallied right into the close. You guys, folks, am I not sharing the screen? I am sharing the screen. All right. Rallied right into the close on the end of the day, while the NASDAQ, you can see, is starting to see a little bit of weakness now. When we were talking yesterday, we were seeing the NASDAQ moving higher late in the day, that weakness. So are we getting that sector rotation out of some of these tech-centric home office type equity trades. I mean, we've talked about this. Earlier on in the week, I saw a lot of these techs getting a little bit weak from the upside. So would be an opportunity. That's why I was looking at these. Now we're seeing this rotation out of the tech and into some of these reopening trades, like I mentioned with the travel and leisure. So let's take a look at that, because that might be an opportunity to start jumping on board here. So, EWZ, I'm out of as well. Actually, did I end up getting out of those short calls? I am not out of the EWZ, because this is the one we're using on the short calls for today. But I have to look at my short call spread. I'm short the 42-43 call spread here in EWZ. It was really close to being filled. I originally sold it for 33 cents. I'm trying to get it back for about a nickel here, folks, and it's trading around 10 cents. So I'm a little bit away on this. And the reason why I'm trying to play this out is because we've got this webinar today where we're doing it on the short call. And I built a short call spread for the short call spread webinar. And at the same time, I did a short call just to show you guys a comparison and contrast of the two strategies working and how the levers and pulleys of a spread work versus the short call. All right. I've talked time and time again to folks where I've said, hey, this short call, although they say it has more risk, if you have a higher probability of success, is that more risk? Well, it's kind of, you gotta weigh the levers and pulleys and the risk reward, right? Yes, it could open up, 100 points higher, and that would hurt on the naked short versus the call spread. But the fact of the matter is that is highly unlikely to ever happen. All right, so EWZ, I have on a short call spread, both the short call spread and the short call working out quite nice, but I'm going to be talking about this specific example today, right after the close. So please check that out at Pro Trader Strategies, folks. And then I think I've run through for the most part, other than gold futures, pretty much unchanged. Bitcoin, boomer coin, coming off today. Now, this whole quote unquote boomer coin nickname for Bitcoin, I would have to say, is kind of like a backhanded compliment, if you will. But that does not bode well for the younger millennial trader if they're looking at Bitcoin as boomer coin. They have a tendency to stay away from the things that the boomers want to trade. So there could be another influx of crypto craze, if you will. But I think Bitcoin is going to struggle with its new nickname of boomer coin. So keep your eyes out on that. Yesterday, we started seeing some weakness. But again, I think right in these mid 30,000s is going to be where we kind of hang out for a little bit here as inflation, all of these global tensions are going to be credence to a cryptocurrency, right? As these global communications break down or these treaties start breaking down, all of those things is going to be bullish for something like this, I feel. So Bitcoin making that move to the downside because of, I think, a lot of younger generation are trying to look for alternative investments. They want volatility. They're seeking volatility. And this, I don't think, is delivering at this point. So they're going to be going out there and looking for something that has a little bit more volatility to start playing around with. And that's about it, folks. I've gotten, booking last trade that I've gotten out of, played this to the upside and covered it earlier this morning. We talked about this on the trade setup. We got the sell-off, came down here, talked about this a couple of days ago, bounced off of this line that it lines up with a really old Fibonacci that I have, but that has acted as support and resistance before, so I decided to throw it in on this chart. It has followed through. We got the bounce, and as soon as we pierced above this Fibonacci, yesterday I didn't get out. Today, when we pierced above this Fibonacci, I decided I wasn't messing around with this anymore and decided I needed to get out while the getting was good with this trade. Because if it finishes near that low today, it's going to look like it's ready to start rolling over it after testing that fib a couple of times and failing. So with that said, if you guys remember, just a couple of days ago, I went in there and bought those SEP 2,300 calls for $74.40. I got out today for $86.95. So nice trade today, pulling back. I'm going to be walking away from this, but travel and leisure is starting to look like it's making a move to the upside. Opportunities around, looking at UAL, American Airlines, these chart setups, it was looking a little bit better today. That finished towards this bottom here after testing that value area high. May not be as pretty a setup as I was expecting there. And everything that was up this morning is down on the day right now. So a lot of rotation happening here. And again, it's going to be more of a timing swing on these swing trades, folks, because I think that the volatility, although the volatility in the VIX is coming out, folks, I think that we're going to start seeing these rotations where one day your stock is up, the next day it might be down, and flipping back and forth depending on which day these fund managers are starting to shift their rotation. But I do still believe that this travel and leisure section or sector is something that has a lot of upside potential here, especially I'm seeing everybody start to book vacations and get out there. So I think that that could be the opportunity for the upside here in travel and leisure. I don't have a whole lot. Like I said, I just took off my booking this morning, which was really the focus of my travel and leisure. But I do still have on Win as well. I'm long Win and long Penn for those casino stocks. And that's about it, folks. Like I said, if you're watching this on tape delay, since you guys didn't comment during the live session, comment. I'm going to come back around and check you guys out. Also, there's going to be a link at the end of this video. Please click on that. You'll get access to the webinar today. So make sure you guys check that out here at the end. And finally, if you want to learn about options or how to trade options, hit that subscribe button. Hey, if you just want to talk markets, comment back and forth with me. We're going to be doing these. You'll get notifications, so please check that out. And finally, you know what? Smash that or take that. Bye for now, and take it easy.